What's going on, guys? In this video, I want to break down how we made 150% on the 605 calls that were called out today on Twitter. So without further ado, let's go into our top-down analysis of ES. I use ES mainly when I trade SPY. It's a great tool for me, obviously, because you have more data with futures trading. But the first thing I want you guys to focus on is let's identify our key draw on liquidity, right? In this instance, the draw on liquidity would be this high at 6096 flat, right? So let's identify this, and we'll make this a green color for the draw on liquidity, right? When I say draw on liquidity, I mean this is the next old high or old low closest in proximity to you that should get swept out. So focus on this high right here. The next confluence for being long, guys, was this 1 hour fair value gap that was being respected very, very well in today's cash session. So we're going to mark out this FVG. We'll make this green as well. We'll make it a little bit see-through so you can see the candles. Here's the FVG that was another level of confluence to remain bullish for the last 2 hours of the session. So let's go into the signal. The signal came in at 2:05 p.m. Eastern time. So here's the hourly chart on SPY. Let's dive into the 15-minute, and in this instance, I'm going to switch to the SPY chart. Now, what I want you guys to pay attention to before we get into why I entered this trade and why this trade worked out is this right here. When I mentioned 605.30 equal highs target and I put a magnet emoji, what I mean to say is one of my big confluences in trading is equal highs and equal lows. This can be found on any time frame. You could trade it on the weekly time frame, the 15-minute, 4-hour, 1 hour, etc., etc. In this instance, I noticed these equal highs on the 15-minute. So this high right here at 605.29 and this high right here at 605.30, these are equal highs to me. So I'm going to give you guys a golden rule of my trading. This is something I live or die by. Don't short with equal highs above you, and don't long with equal lows below you. Equal highs act as a magnet, so don't short against them. Equal lows, if we had equal lows in this instance, don't go long against them because that would also be a magnet as well. So another confluence that I had on the 15-minute chart is this 15-minute FVG that was also holding very, very strong. We're going to mark this in a green color as well, and we're going to do the same thing. We're going to make it see-through. Now, without further ado, this is also my last confluence for the trade, and you guys already know this. It's the option contract chart. So let's dive into the time of alert, and let's see what I did correct today and what I could have done better. When I backtest my trades, I always look at what I could have done better. And the funny thing about this trade actually is I was 1 penny away from getting stopped out actually, but I want to teach you guys a lesson about that as well. So 2:09 p.m., or I believe it was 2:05 p.m., excuse me. 2:05 p.m. was my time of entry, which was on this candlestick here. So we're going to mark that as our entry. Obviously, we could have gotten a way better entry, but my bias was correct. I stuck into the trade. I held and it paid out, and it gave us a great R multiple, so that's the most important part. I actually took this trade based upon the 5-minute chart because price was moving a little bit slower than usual today, but not to worry. So entry came at this candlestick right here. What I was anticipating from this candlestick, and I'll mark it right here, entry came on this candlestick right here. What I was actually anticipating, and it took a little bit longer than expected, was I wanted this 5-minute bearish gap to get invalidated. So I thought this candle would press up and sweep these equal highs, but it took a little extra second. It didn't do anything crazy. It ended up touching this lower 5-minute gap, had a really nice bounce out of this 5-minute gap, and ended up sweeping these equal highs. Now, equal highs right here, always focus on these two. I'm going to get rid of everything else in the chart. When I'm taking trades, I always focus on the target first, and I try to reverse engineer the trades. So if I see a pair of equal highs, I'm already long biased. Now I need to work backwards and find a good entry with a great risk to reward setup, and kind of work backwards and reverse engineer the trade, like I said before. So equal highs are here. Let's go into the option contract chart, and let's dive into the entry, the exit, the trim, and basically how this trade played out. So I'm going to go into 2:05 p.m. here, Entry came on this candlestick at 39 cents. As mentioned in the signal, stop loss was at 25. Again, 605.30 equal highs target. So stop loss was 25. Now, what I want to teach you guys is at this point of the trade, we're 1 penny away from getting stopped out. Does that invalidate that we have equal highs above us? No. As a matter of fact, I want to teach you guys that anything in between your stop loss and your take profit, it's all noise. Once you're in a trade, accept your risk, follow your plan, don't get emotional, don't freak out, don't close it early, let it get stopped out. If I had gotten stopped out on this trade, I wouldn't even be that mad because it's a trade setup that I love. I love taking equal highs. I love buying the contracts while they're a little bit cheaper. And obviously these contracts have a lot of range. So entry came at 39, stop loss came at 25. We'll mark the stop loss as a red line. We'll put it right here. Now, what I also like to teach you guys here too is if we just dive, we can keep it on the 1 minute. How do you know where to trim these contracts? And I've spoken on this before on my YouTube, but I'm going to actually mention it one more time. On the option contract chart, we have a bunch of equal highs here. That's a good trim spot, but I'm not going to take a first trim at 5 cents per contract. What I'm going to focus on this option contract chart is these highs over here. So we took a trim at 54. Entry came at 39. Let's get rid of these equal highs here on the contract chart. I want you guys to see how much range these contracts have and good spots to trim at. So up here at 74, we have a bunch of equal highs. We'll mark that as a level, right? We have another old high here at 84. I'm pretty sure we had another old high around 104. Another equal high setup. We ended up topping out at 103 per contract, but this is a simple confluence that I keep in my trading. And in today's instance, 1 penny away from getting stopped out, not to worry. I could have gotten a better entry if I was just a little bit more patient, but you can't be perfect with trading. What you can be perfect with is your emotional intelligence, your execution, and just spotting these setups. So this is a quick breakdown of how we caught 150% on these calls. And obviously I post these for free on my Twitter, so definitely drop me a follow at Rippy Mode. Same thing as my YouTube handle. So I appreciate you guys. I hope these breakdowns are helping. Simple breakdown. Don't overcomplicate your trading. Simple equal highs play. It's as easy as it gets, right? And one more time before we log off, remember the golden rule. Don't short against equal highs and don't long against equal lows. That golden rule will save you from taking dumb setups. It will save you money. And it will also make you money. And in trading, it's all about protecting capital and taking smart trades. We're not here to gamble. We're here to take calculated setups with high probability and great risk to reward. So thank you guys for tuning in. This is episode 2 of the Bootcamp. Simple trade breakdown, and there's a lot more to come. So I do appreciate you guys, and have a great night. Take care.